Hey everybody, welcome to the Wealthy Idiot Show. Today we got a special treat. I brought in DC, my partner, who writes all the articles on our website. He has been doing this whole investing thing with him and his wife for, about 10-ish years or so?
I'd say it probably got serious 7-8 years ago, so yeah, you're close.
Okay, awesome. And you both have been working some... we'll get into it a little bit more, but we've both been working kind of like I would say basic American jobs. One of you is a teacher, the other one is in the government, right?
Yep, that's right.
All right. So, you're not like bringing in millions of dollars every year. And the idea is you've just been researching really hard into where to stick your money for retirement, tax breaks, maximum growth, all of that, just as, an ordinary family just trying to get there.
Yeah, exactly. And a lot of it's trial and error. So once you start to do it wrong, you figure out how to do it right. So going through that process, you slowly get better. That's not to say it was great in the beginning.
Yeah, that's true. Trial and error. All right. So welcome to the show. Why don't you go ahead and introduce yourself? Let us know a bit about your background.
Yeah, so I'm DC Poc. Again, I'm the main content writer for Wealthy Idiots and co-founder, while AJ over there does most of the videos. So this is my first appearance, actually. But I graduated high school at 18, joined the Marine Corps shortly after, spent 5 years in that. When I exited, went straight to the old university system, finished with a bachelor's degree, and then quickly after got an MBA. And then I've been climbing the ladder since then. And then on the side, I've been just gaining this momentum in personal finance, and it's really become a passion, which obviously led us to the Wealthy Idiots. So that's where I am today. I've got like you said, a teacher wife and 2 beautiful children, and that is where my free time goes.
Awesome. Well, thank you so much. So when you first started this process out, how did you get into it? Like, what was the first thing that kind of set you off on this path?
So I'd say it's kind of slow, but one of the things that stands out is I asked my grandparents for investment advice back when I was, I think, in my first or second year in the Marine Corps. And my grandma gave me a financial advisor's phone number, and I called him, and I spent like $10,000 investing with him. And then soon after, I realized that he put me in 5.75% load funds that were front load. So I lost 5.75 right out of the gate. And then I started researching investments and why that was a bad idea. And shortly after, I realized that my grandma and grandpa didn't intentionally fleece me, but they were also under a, kind of a misconception of what investing was and how you were to do it. So that's really what piqued my interest the first time and made me realize, like, hey, if I'm going to do this, I need to take control of my own situation. No one's going to do it for me. Like, I can't rely on other people. I care about my money more than anyone else, and I need to play it like that.
Why did you think that they would be a good source to go to?
I looked up to them, role models. I mean, I thought they had the perfect nuclear family, just the life where they were living exactly like I thought you should. So I figured everything financially was in perfect order. And for the most part it was, but that's not to say they didn't have inefficiencies, which I discovered in a short time and then realized that there's probably more in day-to-day life that you can uncover. And that's kind of led me to just constantly dig for more information and, try to figure out what's a better avenue. If I did it wrong the first time, how do I avoid it in the future? If I'm not spending money in the right place, what is the right place? And that's kind of where I've played it from there.
Gotcha. Okay. So not everybody has all the answers, and you got to kind of dig around and find them. So in your case, you found a source that you trusted, but they didn't have everything.
Absolutely. I mean, look at our name, the Wealthy Idiots. When you and I first talked about this, it's the misconception that you have to be brilliant to do this. It's not. You have to have a desire to learn and be better, and you can figure it out. Anyone can figure it out.
Awesome. Yeah, I agree with that, which is why I agreed to the name.
Oh, yeah.
In your investing so far, what has been your favorite investing type? Like category, so to speak.
What do you mean by category? Are we looking like investment account or type of investment? What's the...
I just mean like real general high level, like real estate, stock market.
So I would say it's a blend of real estate and total stock market index funds. So total stock market index funds, as you know, you get the highs and the lows, and you pretty much mirror the market. So if the market's going up, your stocks are going up. If it's going down, you're going down, and you're getting that really equal performance to the market. Real estate, on the other hand, is great, and it's because there's so many opportunities. And I think people just don't realize that it's so available, and it's so easy to do once you've kind of opened your eyes to the avenue. So real estate's great. As you know, I've done, I think, 7 land flips, so small subdivisions, and then I've had a few rental properties. I actually just flipped one today. So yeah, I'm continuing down that path as well.
All right. Congratulations.
Yeah, thank you. Keep pushing forward, man.
Yeah, man. Okay. So I know that you track stuff really closely. How important do you think it is to track what it is that you're doing in order to improve over time?
I don't know how you do it without it. So again, if you can't track prior performance, how are you supposed to change future performance or predict future performance? So I believe in tracking everything. I look where my money goes and what it does for me, and if it's starting to not do what I want, clearly I need to change course. So I think everyone should have the full picture of their financial layout, and that's something people just don't take pride in. They don't really they don't invest their own time in their investments, and I think that's an important strategy.
So what do you mean by full picture?
Full picture, meaning you have your day-to-day operating budget, so what you're spending, what you're bringing in. I think that's step one. Step two is, where do you want to be in 5 years? Where are you putting money to make money? And then going past that, you have to think about the 20, 30-year plan, retirement. Like, are you going to have a mortgage? Are you going to have investment properties? How are you going to supplement Social Security? Are you going to have Social Security? Is Social Security going to exist? I think all those are questions you have to ask yourself. So my plan is layered. I've talked to you before about my buckets. So I want to bring in as many buckets in retirement as I can. That way, if the Social Security bucket disappears, it doesn't crush my plan. And that's the whole premise of my retirement planning.
Gotcha. Okay, so you're not living in a place like I am, where everything, costs $100 or more, just to walk down the street. You're living in what I would consider more of like a normal, maybe average American location. Is that correct?
Yeah, absolutely. In the Deep South, I think our median county income is around $60,000. So.
Okay, yeah, that's a lot different than here.
Absolutely.
So in that location, for most of the people in America who are watching, as opposed to the 2 people who are in Silicon Valley like I am, what would be like your minimum baseline? What's your minimum goal for retirement?
So, I don't want to throw out a number because it's hard to say, and it's also deceiving. So I think we can throw out these statistics, like 70% of Americans are under saving for retirement. But what does that mean? I don't think anyone really understands how that affects them. I think the biggest thing people need to do is figure out what your needs are going to be in retirement, how much income you're going to need, and then base your savings off of that. And you should plan on withdrawing 3.5% a year for the duration of your retirement. I mean, that's the quickest way to get to the number. For me, I'll be honest, I have targets in the tens of millions. I mean, that's where my target is. Is that what I need? I don't think it is, but that's, I'm 34, almost 35 years old. My goal should be slightly stupid, and that's where it is. Okay, I mean, you would agree with that.
Yeah. At the beginning of the conversation, you said that you and your wife are full-time workers in some, pretty, I wouldn't say like moderate, but maybe slightly above moderate positions. In your 30s now, you've progressed a little bit, and you think that in the tens of millions is achievable with the jobs you currently have?
Yeah, absolutely. So one of the things we prioritized once we had kids is really getting down to the nuts and bolts of our budget and figuring out how we can increase our savings rate. So really, once we figured out that savings rate and we got to a comfortable place where we weren't starving ourselves, maintaining it is fairly easy. I think the most difficult part is the initial, like, hey, we're going to save $5,000 a month. That's a scary number for people. But once you get there, you start to plan for it, and it becomes part of your day-to-day life. And that's kind of how we've approached it. Now, I have contingencies for real estate built into my savings, so there's going to be some big years that just jump everything else, and that's part of it.
All right, so you've talked a lot about like where you're going. We've talked about how you plan on getting there and where you started. If someone brand new was about to start this process, let's say they're watching now and they're just trying to figure out what to do with like their first $1,000, what would you tell them they should do to maybe get going?
That's a great question. I mean, this is the part that stumps everybody is the inability to get started. So I'd say if you have your first $1,000 and you don't have any money in savings, you should put it in savings just for the sake of being able to live day to day, and you have a little bit of a contingency. But the next thing I'd be looking for is that 401k match. So if you have a company that matches 5% or 6% of your money, you have to be putting in 5 or 6% to get that match. I mean, doesn't everyone like free money? I mean, I do. So you might as well grab that free match. After that, I think the wealthy idiots would agree we're huge proponents of the Roth IRA. So get that money invested post-tax while you can, so it grows tax-free, and then you can withdraw it tax-free in the future. Once you have those two done, I would move to maximizing the rest of the 401k. Once you've done those three things, I think we move on to things like real estate investing. There's the BRRRR strategy, which is where you buy, renovate, and so on and so forth, and then flip. You could do a myriad of things. There's crypto investing, which, again, just proceed with caution on that. Same with penny stocks. But, again, there's a lot of ideas here and a lot of things you can do. It just requires some research and really just taking those small steps as you can.
Now, I've heard, YouTubers get on here and talk about how 401ks are the worst thing you could possibly do. Why would you recommend getting into that first if all of our financial gurus are saying we shouldn't get into 401ks?
Yeah, so I don't like that take. I think we'll talk about it more in the future. But again, a 401k is the easiest way to save and invest. And some people have a really hard time starting. So your employer is going to take a portion of your paycheck, invest it in the market, and you can forget about it. It's going to happen every week or every 2 weeks, and you're not going to see it anymore. If you get pay raises, you can slowly, incrementally raise that, and pretty soon you're going to be investing a lot of money. And it's less painful than other means you can invest in. So I think it's the starter pack. I think we can call it the retirement starter pack. I think most Americans view it as that, and it's a huge benefit for everybody.
Okay, so you would say that this isn't the end all, but this is a good place to do some work or have your money do some work without having to know too much.
Absolutely. It's one bucket.
Gotcha. Okay. So when, and I just thought of a question that I'm kind of wrapping back around to the beginning a little bit, but when would you say was your aha moment in like, this is working and I should get better at this?
I would say there's probably two different ones. The first one was the first year I maxed out my 401k. So I hit the IRS limit. I didn't see a change in lifestyle at all, yet I was dumping $18,000 in the stock market yearly. And I was like, this is crazy. Why couldn't I do this the whole time? I haven't noticed a single change in my lifestyle. So that was the aha moment for investing in general. Just, if I can do this, what can I do? And then the other piece is real estate. I remember my first real estate deal. My wife and I are sitting at the kitchen table talking about it. And she's like, it can't be this simple. Like, we have to be missing something. How are we going to fail in this? And I'm like, you know what? We got to jump. It may not be this simple, but we're going to take a shot. So I bought, 24 acres. And then 4 months later, I'd sold 4 lots and made like $150,000 profit. So.
Oh, wow. That's incredible.
Yeah. I mean, it validated that it's really not unachievable. And that was the third or fourth time we had looked at making deals, and we kind of backed out due to the fear factor. And, it's hard to try to get people off that fear thing. But, I mean, I did it, and I'm so glad I did.
Okay. So along those lines, you said your lifestyle hadn't changed when you were starting to invest, and that got you a little bit excited. But you could have really easily have taken that cash and went out and got yourself a brand new fancy car. What prevented you from doing that?
So the first thing, 401k is great for this reason. You can't withdraw without penalty, so it kind of fights human behavior. I don't like government regulations, but I will say there's a reason for 401k early withdrawal penalties. I think we could agree on that. So that's one reason. And then the second one is, my vehicle purchase. I try to be strategic. I'm not saying I haven't made bad decisions. I think I could point out a couple, as we all could.
Yeah, definitely. All right. Let's back up a smidgen. So at the time, like, you weren't buying cars and trying to show off being rich. What keeps you motivated in not spending money on, like, feel good things as opposed to investing it?
First off, I'll say it's not about being rich. It's kind of a weird feeling. I think you can relate to this. As you start to accumulate wealth and you kind of get to where you see yourself being, you realize you have like less and less cash. So I think that's an interesting dynamic, because I don't have 20 grand sitting around to go spend on a vehicle, and that is what it is. But I think it's just the the immediate reward versus the long-term reward. So I make sure my family has fun. We go on vacations. We spend time at the lake. We do have a swimming pool, so my kids absolutely love that. But we just got to weigh, like, how much does that 10 grand we could spend today really make a difference, whereas it could make a huge difference in the future. I think you've touched this on a couple videos, like, what $10,000 can do compounding over 30 years, and it's crazy.
Oh yeah, definitely. The idea that if you start thinking of things in terms of how much this is going to cost me not investing it, the opportunity cost of not investing something. And 30 years, what did we say? It was something like your money is worth 7 times the amount. So $1 is $7.
It's stupid. I mean, it really is stupid. That's the best way to describe it. And, I mean, if you start to get people to open their eyes to compound interest and just what you can do in the market over time, it's eye-opening.
Now that you've kind of done this for a while and you've progressed quite a bit and you learned as much, supposedly as you can, do you feel like you've progressed to a point where there's nothing else you could do, or do you feel like there's still more that can happen?
No, your statement's kind of funny, talking about progressing where you can't learn anything else. I mean, it's impossible. Every day I read a financial article, I see something that I just didn't know. It's like something new that I never saw before. So this is just such a vast space. I think you just got to continue to hunt for ways to get better, whether that's cutting another $100 a month out of your budget, or maybe you find a deal where you needed a lawnmower and you don't want to pay cash, and you get a 0% rate for 4 years, and you kind of save on your budget that way. I mean, you can get creative with this. There's a lot of different ways to do it. So I think it's just, based on individual preference and finding what works for you.
Okay. And then to sum up, like last question, just to sneak one in there just for fun. The economy has been taking a giant dive the last few months. Everyone's talking about the bear market, and obviously everyone's a little scared and nervous. During this time, when everybody is kind of backing off and maybe, clutching their pearls a little tighter, what is it that you're doing?
I think, Warren Buffett said, when people are greedy, you should be fearful, and when others are fearful, you should be greedy. Right now, I'm in the greedy camp completely. I talk to my father about this all the time. He's in the fearful camp, and I am in the absolutely put all my money in the market camp. So, again, this is going to happen multiple times. We saw it in 2007, 2008. I think a lot of our viewers probably remember 2000 was a pretty big one as well. So, again, you want to predict these things happening. All you can predict is that they're going to happen. I'm certainly looking to the other side of it, and that's what I'm waiting for.
All right. Maybe we'll do another interview whenever we hit the other side. We can kind
of
see
I
how
hope
it
it's.
worked out.
I hope it's not 2 years from now.
Well, are you retiring in 2 years?
No, so I'm good. But I just,
okay.
For my own, I just prefer not to push it out that long.
Yeah, I don't think anybody.
That'd be a rough 2 years for people.
Yeah, yeah, that's the truth.
Yeah.
All right. Well, thank you so much, DC, for stopping by. We really appreciate it. Hopefully, we'll get you on soon. If anybody wants to ask a question, and if we missed anything that's interesting, comment below. Maybe we'll do another video where we can answer some of the comments, some of the questions asked. But like and subscribe. Make sure you don't miss anything out. We got more interviews coming, and you're not going to want to miss those. And yeah, thanks again, DC. Appreciate it.
Yep, absolutely. And then, hey, I just want to make an announcement. We're continuously working on bettering the site. So we're going to have some other things, like maybe a feedback column where we get some ideas thrown at us and we talk about them in a collaborative manner. And then also we're going to keep pushing videos. So you're going to see a lot more of me, and then we're going to keep that content coming. But thanks for having me, AJ. I appreciate it.
Yeah, check out wealthyidiots.com. It's down here somewhere.